Hey, PI listeners, this is Lane Kawaoka. This is the PI Investor Show.
I just want to take a time out for today's sponsor. A lot of passive investors I partner with have one major challenge. They are busy professionals that love to create memories with their families, but are too busy to actively look and find value-add real estate that cash flows. Hey guys, I'm John Fortes, and I want to partner with you. If you are interested in creating passive streams of income, wealth creation, and all the tax benefits that come along with passive investing in real estate syndications, I encourage you to fill out the form at johnfortes.com/workwithjohn. Invest today so that tomorrow you have more time to pursue the things you truly love. Once again, that's johnfortes.com/workwithjohn. I can't wait to partner with you.
Are you a busy professional looking to diversify your portfolio? Ever wanted to passively invest in real estate but don't know where to start? John Fortes provides you with a guide to passively invest in real estate. This is the Passive Investor Show.
And now, the Passive Investor Show. Here's your host, John Fortes.
Hello, PI listeners. Thank you for lending me your time today. Welcome to the Passive Investor Show. I'm John Fortes. Our goal is to provide you, the busy professional, with passive investing tips and tricks for your real estate investments to leverage more time for you to focus on your true passions. Let's get to work. Today's guest is Lane Kawaoka. Lane Kawaoka currently owns 2,600 plus units across the U.S. He lives in Hawaii and recently quit his day job as a professional engineer with a MS in Civil Engineering Construction Management and a BS in Industrial Engineering. Lane partners with investors who want to build their portfolio but are too busy to mess with tenants, toilets, and termites by curating opportunities in his Hui Deal Pipeline Club, where his investors have personal access to him and know that Lane is personally putting his money on the line too. The Huey Deal Pipeline Club has acquired over $155 million of real estate, acquired by syndicating over $15 million of private equity since 2016. Lane reverse engineers the wealth building strategies that the rich use to the middle class via the top 50 investing podcast, simplepassivecashflow.com. Lane's mission is to help hard-working professionals out of the rat race and one free strategy call at a time. Hey, Lane, I'm grateful to have you on the show.
Hey, thanks for having me, John.
Lane, tell me more about your background and why you chose passive investing.
Yeah, I mean, I've been investing in rental properties since 2009. Went to work as an engineer out in the field, and I didn't like my job at all. So I bought a house to live in. Again, I don't really believe buying a primary residence is the way to go. I think you should invest. But I did that, and then I started to rent it out and became an accidental landlord. And then I realized, this property that I bought was an A-class rental. Again, what you shouldn't do, you should be buying more B's and C's in a primary market. And it was... Yeah, primary market, should probably buy in secondary and tertiary markets, but I still cash flowed, and I was like, wow, this is my ticket out of this job thing I have. So that's kind of where it all started.
So I know it was accidental, but was there anything kind of lining that up, or did you just kind of obviously accidentally fell into it? Did anyone push you or steer you in that direction?
Not really. I mean, growing up, my parents always told me, like, well, you don't want people to rent out your house because they'll screw it up. And I didn't really have anybody in my family who did this whole landlording investing thing. So when I did it, I was just kind of lucky that I was just this 20-something-year-old kid who was willing to rough it a little bit for a few years. And what I did was I lived in company lodging because I worked on the road all the time for my job, which they usually stick the new person at. So I just lived in the company hotels for about a few years, just saved my entire paycheck, and all my money went to be buying rental properties for a few years. And
So, sorry,
yeah, yeah, and that was kind of the start of it all.
were you buying actively or passively?
Initially I was buying, like I said, the A-class rental in a primary market, which was Seattle. And then I started to read these books about like, hey, you should be buying more B and C class stuff because the numbers are a little bit better in terms of rent to value ratios. There might be a little bit more headaches, but that's why you don't go to D and F class type of tenant base. There's a nice sweet spot in the middle. So following this logic, I went and bought an A minus rental, a duplex in a little rougher part of Seattle, but Seattle nevertheless. And so I bought that duplex, had 3 units in the first few years, and then about that time, 2012 was around, and if people remember, that was when the market started to really recover. And I was going to buy my next property, but nothing cash flowed, and I thought my investing career was over, right? Because I can't cash flow. And so that was when I kind of got turned on to these turnkey rentals that you can buy out of state, which is not a bad way of getting started, especially for people who live in Washington, Los Angeles, or any California or Hawaii or any primary market, and you're just not near the deals. So sometimes you just got to pay a little bit extra for a turnkey rental product.
Awesome. And when did you consider just passive and no longer active?
So I got up to 11 rental properties in 2016, 15. And that was where I realized that turnkey rentals or single family homes are just not scalable, right? Like 11 rental properties, that's a few $1,000s of passive cash flow a month, which is great. Awesome. Not complaining about it, but that I'm going to need like 3 times as much. I need $10,000 a month to be able to quit my day job and to sustain life. And with 11 rentals, I was getting like an eviction or two every year, a few catastrophes that happened once a quarter. Nothing that wasn't like out of hand, right? Like I had a property manager and they dealt with the day to day, and they would just send me an email or phone call here or there. But the numbers were I needed 30 of these things, so just multiply all those exceptions times 3, and it just wasn't scalable. So that's when I started to learn more about multifamily, get involved in that. I paid 30 grand to get the mentorship in that. Got to learn how to underwrite the deals myself, but then I also learned that I probably shouldn't be being the direct operator, boots on the ground, because who was I kidding myself? I lived out in Seattle at the time, and I just wasn't able to build those broker connections. And me personally, investing as a passive investor today, I don't want to invest in a deal if somebody lives out in California and is doing like a Dallas deal. That's just I'm not going to invest in that personally.
So how are you vetting out your sponsors that you're investing with?
Yeah, I mean, I think.
Or how did you vet that out? I'm sorry.
Yeah, I mean, it took me about like a year to 18 months before I even dropped my first 50 grand on a syndication deal, just to get comfortable with it. I mean, when I first saw these syndications, I thought they were like a Ponzi scheme from the get-go. And I had invested, 40 something thousand into a deal where the operator just pretty much ran off with the money. It was more of a JV type of agreement. It wasn't a PPM where the SEC was involved, like how these syndications are. But I had been burned before. But I think you and I kind of were talking about it, right? How do you build your passive investor network? Because to me, to answer your question, like that's the only way you as a passive investor can move forward is you need to create a network around you. Talking to operators and syndicators, in my opinion, is just a waste of time. I mean, I syndicate deals. I can talk about this stuff in my sleep, and it's a little scary. So you talking to another syndicator will really do you no good. I mean, they're all going to tell you the same thing. Where it really comes down to is you building up your passive investor network who has been in these previous deals and who will be able to tell it to you straight. You know, who exactly out there has a good track record and who pretty much has good integrity.
I pretty much like what you do. You're almost like a consultant more than a syndicator, because you're placing capital from your private investors into these deals because you have great working relationships with them. But it took you a while to build those relationships. So I like the fact that you said it took you a year before you actually invested in something, a year, 18 months or something like that.
Yeah.
And that sometimes it takes that time, and that's the reoccurring theme sometimes for these passive investors, because you're getting to know the person that you're putting the capital in. And what is the timeline for new investors when you're meeting with them?
I mean, I don't really keep track of it, but it seems like, it takes some 3 to 6 months, I guess, to kind of finally pull the trigger to, but what I notice about some, those are like the newer investors. This is like salsa dancing. If you know how to salsa dance, you can go wherever and just jam, right? People who have been in private placement before, they get it. They know what few questions to ask. They know what are the silly questions not to ask. And they kind of move ahead. And especially for the more affluent investors, the $2 million and above guys, like they'll just do test payments. They'll come in for the minimum, and they might do another deal, but they'll sit and watch, and they'll see how well the deals perform, just to start a relationship, right? I mean, worst comes to worst, the deal just absolutely bombs or somebody runs off with the money. They kind of just take the lumps, right? That's just the name of the game. Obviously, that's not what somebody who is a non-accredited investor can survive, right? But for the accredited guys, they just put a whole bunch of $50,000 investments out there and see who really performs, and then if you perform, that's when the floodgates start opening.
So how long from your first passive investor deal till your second and third?
I mean, once I was ready, I was kind of ready to unleash the beast. I mean, for me, what probably took me so long to like finally pull the trigger is like, or what pushed me over the edge is like, I built relationships with a whole bunch of other investors, probably about a couple dozen or more who have been doing this. But what really pushed me over the edge was I met like a few people who were in like 20 something deals or more. And I just didn't build like cursory relationships. It was something that I kind of had to nourish over time. But I got to the point in the relationship where I was, I had the ability to ask them like, hey, John, like you're in 20 deals. Like, just tell me, like, you don't have to tell me who the operators are. Like, how are these things performing? Like, I just want to tell me what the spread is, right? And they're usually like, yeah, one or two of them are out of 20 are not doing the greatest. We don't know what's really happening in there. There might be some foul play. We don't know. I mean, but we didn't lose all our money. A few deals, we doubled our money in 2 to 3 years. Amazing. And then the rest, the 80% or 70%, if you will, were right in the middle. And for me, I was like, all right, cool. I can deal with that spread. And that was where I realized, like, as an investor, I was going down this road of being an operator. And then I realized, like, where my net worth was at the time, if I would just made 15% of my money, I would get to my financial goals, eventually in the near future, like within 5 years. And I asked myself, am I willing to take on more risks, being the operator, doing hard monies, taking the time out of my day to do that? Or should I just be a passive investor, right? I mean, the passive investor route is awesome, but you need money, right? It depends if you're at that critical mass point. It could be as low as $500,000 net worth. It could be as high as $2 million net worth. But it depends on where you are.
I want to ask you something, and I don't know if you've actually calculated this or anything. How many times have you recycled your first investment, your first passive investment?
Um, I just so the first deal I got was like 350,000. I bought with I think it was like 60 grand down or so. I sold that in 2014, about in 2019, sold it 5 years later in 2014, and I pulled out maybe like 150, $200,000 of gains. And somebody just asked me like the other day, like, oh, like, Seattle's a hot market. Like, go see what it is today. And I didn't really want to look, but I looked. That same $350,000 house that I sold for 450 is now worth 700. So, they could say, oh, you dummy, right? You left like $250,000 of profits on the table. But if I didn't do that, I wouldn't have 2,800 units today. And more importantly, I wouldn't have the social capital I would have today, nor the knowledge of this stuff. So, drop the mic on those guys. I mean, appreciation is wonderful, but yeah, you got to keep re-leveraging that thing.
Absolutely, absolutely. I love the way you look at it as well. So, um, how has this changed your life?
So I quit my job earlier this year, finally. Took me 12 years to get out of the rat race that I did. And yeah, I mean, now I get to kind of do stuff because I want to, not because I have to. Um, I like the real estate, the passive real estate investing gig. Like when there's a deal, I go out and visit it. Do actually go out and walk the property. Part of it is because people kind of follow along with me, so I kind of felt like it's my duty to do that. I just didn't want someone to call me out and it's like, what do you mean you're going to this deal and I'm following you and you haven't even visited the damn property? Like, but it is fun. Like it makes traveling. There's a reason why you're traveling. You're always able to write everything off. It's a nice lifestyle. Not complaining.
That's pretty cool. I kind of want to go back and talk about that JV deal that you got burnt in. And because you said there was no PPM involved or syndication structure, what would you do different and what did you learn from it that if you see it again, you'd be able to recognize it?
Yeah, I mean that the lesson learned there was like only work with people you know, like, or trust. So this guy, he got recommended to me on a referral from some self-directed IRA company. I don't know what the heck I was doing taking advice from a self-directed IRA company, but that's what I did. This was back in 2012 or 13 or something like this. This is a while ago. But the funny thing is, like, 6 months after going into that deal, I really started to get involved in like all the online message groups on the forums. And I quickly met some folks and they said, yeah, that guy you were working with, he's a shyster. He already did this one time before. And, sure enough, 2 years later, I get this email or this letter saying that the property is in shambles and the LLC has gone bankrupt. And essentially what the guy did is he just embezzled the money and he just let the properties rot. And I kind of hid behind the curtain there. So I didn't really fight it legally. I mean, to me, I think it was more like lost life energy if I were to go fight it and try and get back 40 grand. So that's just how I am. If I'm from Hawaii, people do that. We'll find you in the parking lot, solve it that way.
Well, I'm sorry. I'm sorry that you have to actually
Yeah.
go through that. And, thank you for sharing what we
Yeah.
can spot and
But I think the lesson learned there is don't work with people you know, like, or trust, but also don't just invest off this like proxy nonsense, right? Like let's just say I trust you, John, but like and like you hear it from some other guy that they're in this deal and it's good, right? That's an example of like a proxy referral. Don't just take that. You got to know the guy in the deal. because I think what you see a lot of times is like, especially with passive investors, they all think that they know what the heck they're doing, but most of them are completely clueless. They say this deal is good, and it's like, well, what's your basis in that? Like, to me personally, I run the numbers, I take the T12, I take the P&Ls and the rent rolls, and I put it into my analyzer, and I independently analyze that deal, regardless of what other people do. What I've learned most out there is most people can't do that, and they're just going off social proof because they want to sound like they're in the cool kids club, you know. So as long as somebody has enough social media following, they can create that gravitational pull. Whether it's right or wrong, that's just the way the world works. And there's this next ring of unsophisticated passive investors that just kind of go along like sheeple. So lesson learned is you can't go off of the proxy referral.
That's huge. That's huge. I appreciate you for sharing. So tell me how this jump started your company, your business, and what you do today.
Yeah, so initially when I started to do my my blog and my podcast, it was just to talk about like turnkey rentals, because I started it back in 2016 because all my friends were asking me, well, how do you buy these properties across, 2,000 miles away, and you don't even visit them? And you know how it is, John. Like, I'm sure you have many friends like this that they ask you a whole bunch of questions. You tell them, and they do like jack, right? They don't do anything. So what does anybody do that is time efficient with their time, but record those talks and have people listen to it in the future? So the first like 20 of my podcasts were like really centered around like those turnkey rentals, remote investing. But then at that time, I was starting to do the multifamily stuff myself because I was having that change of heart with scalability. And that was where, people start to see the story change. Like my podcast is not really like, hey, do this, do that. It's like, hey, here's the things I'm doing. You want to kind of follow along on the journey and see some of these issues that pop up. You can follow me. Some people don't like it because I don't know, it's not professional or whatever. I don't know. But
No, I like it. I like that because you're just, you're answering or basically teaching people through your experience, and you're doing it because it's the reason why I created this podcast. I don't want to have the same conversations over again. I want people to be informed so that when we have these conversations, we can each kind of be on the same page a little bit faster. So I completely understand about having to go through the same conversation over and over again. I get it.
right. And you kind of broken through to that next level. But what I realized, like, for the average guy who's locked into a 2-hour commute every day, has a busy family, they just don't have the bandwidth to get off the ground. And yeah, they have money to invest, but they just don't know where to put it. And here's this friendly face with a crazy theme song to his podcast, the guy that they trust, and they just want to copy me. They're like, are you going 50,000 to this deal? And I'm like, yeah. Well, shoot, it must not be that bad, it's the thought. And then they get success and then they join on the next one. So that was kind of the way it all started. It was like just a bunch of buddies. A lot of the people who I meet, who book a call with me and just a chat originally were, they're some of my better friends today. And it's kind of crazy. And those are the guys who were in it from the start. And, but, as time moved along, people just kind of want to know, what am I doing? I mean, it's like the whole with stocks, right? The strategy of whale watching, right? You just watch what the big players are doing. And at the end of the day, I don't know if these deals are going to perform, but I know the people, and I know I've underwritten the numbers, and I know that this airplane is taking off with at least a full tank of gas as opposed to a quarter tank of gas. There's a lot of unknowns with execution of that plan, and as an operator yourself, you can attest, right? You can do everything in your power, but sometimes it's just not going to happen. Again, that's why you do real estate, because it really isn't that risky, in my opinion. I mean, it's a hard asset at the end of the day.
Completely agree. Completely agree. Can you give me one piece of advice for the PI listeners?
I would suggest learning how to analyze the numbers yourself. It really isn't that hard. You just have to have somebody to teach it to you, and you may have to pay somebody to do that. I like Camus wine. It's $130 bottle of wine. Sometimes I do it for that, but you just need somebody who knows how to analyze the numbers to analyze the numbers. Because I think, to me, that's how I vet sponsors first. Like, I'll run the numbers and I'll see what you're doing. I'll know what kind of tricks and games you're playing. And if you're kind of doing some questionable things, I'm not even going to waste my time to talk to you.
That's pretty informative. What would you tell the busy professional who's $2 to $5 million net worth, has cash ready to go, no time to analyze the numbers? How would you go about it that way?
I would just pay a consultant to tell you what to do, but pick the right one. I meet guys like that all the time, and I tell them, okay, whatever you do, don't invest more than $200,000 in the next 6 months, right? Put the money out there in the smallest increments you can, but just don't blow your load that way. Like, that's just a recipe for disaster, to invest out of haste.
Absolutely. There's a few players that want to come in and kind of throw their weight around, but I know you mentioned it earlier. I strongly recommend, if this is your first deal, come in with a minimum and just test the waters. I know I recommend that. I know you recommend it. We've touched upon it. And I just think that's kind of one of the best pieces that anyone can go off of. And I like the fact that you say hire a consultant to kind of guide you through that process.
Yeah. I mean, hire 2 consultants, right? Yeah. That's why we got 2 eyes. I mean, in the process, you'll learn a lot, but I think it's just an insurance policy to know that at least you're not making a bad decision.
Absolutely. Lane, how can we reach you?
Yeah. So my podcast is Simple Passive Cash Flow, and my blog is simplepassivecashflow.com. Email is lane@simplepassivecashflow.com.
Thank you for coming on. Thank you. Guys, you've heard it from Lane. He's a 100% passive investor. Actually, Lane, I got one more question. Do you still own those 11?
So last year I started to liquidate them. Last year I sold 7 of them. I used a variety of ways of selling it, different online brokers on the ground. But what I would do is I would, throw 10, 20 grand to fix it up and then sell it retail. Because those rental properties, like, it's hard to sell those things. That's why I don't recommend buying duplexes, triplexes, or quads if you're higher paid professional, because there's no exit strategy on those things, even though the numbers look better on the front end. It's very nearsighted to kind of think like that. You will sell these properties if you're a higher net worth individual. But this year I got 4 left, and then 2 of them I think will sell this week. So very happy about that. Yeah.
Good for you. Good for you. I'm excited for you. And are you moving those into syndication offerings?
You gotcha. But that's a nice thing. Like, I sold all these properties slowly, right? So I don't have that problem that your other buddy has with the millions of dollars. I try not to keep much money in the bank, making 0%. I get anxious when I have so much money like that, making nothing.
I hear you. Try to make your money sweat for you. I got it. I like it.
Yeah.
I loved answering. Finishing off the podcast on that. I usually do a summary, but thank you for letting us kind of go back and revisit those 11 properties that you mentioned earlier.
Yeah.
Thank you.
I got 2 left if people want to buy it. SimplePassiveCashflow.com.
Go see him at SimplePassiveCashflow.com and go look for those duplexes.
Yeah.
Well, thank you for coming on, Lane. I greatly, greatly appreciate you. Thank you for your time.
Yeah. Thanks, John.
PI listeners, I'm grateful for your time, and I appreciate you for listening. For more information, go to PassiveInvestorShow.com. If any of this resonates with you, please subscribe and leave a review. the more you know, the more we grow. Thank you for tuning in. Till next time.